Hi everyone, Coulter Brown here from the Northern Ag Network with our update on livestock markets. Thanks so much for joining us. Once again, we saw cattle markets disrupted by an outside event. This time the Russian invasion of Ukraine really threw every single market off, but for the cattle, there's plenty of reason to still be optimistic about the long-term direction of this market. Today we're going to talk about if the Russian invasion of Ukraine changes any of the long-term fundamentals for the cattle market, and of course we'll run through the markets for fed cattle, feeders, cull cows, bulls, and even the sheep. Real quickly though, first I want to thank our sponsors of the report. Ag Risk Advisors joins us again. Producers may be thinking about some price protection considerations this spring, and one of the most affordable ways to do so is with livestock risk protection. Ag Risk Advisors are the experts on LRP, and he can set you up with daily LRP rate emails. Find out more at lrpadvisors.com. Thank you to Montana Livestock Ag Credit for continuing to sponsor this report. Producers need a lender who understands their business, and the folks at Montana Livestock Ag Credit, they live and breathe the ag industry, and they're knowledgeable and can help producers face whatever headwinds is put towards this industry. And we want to thank the Wyoming Beef Council for continuing to sponsor this report. Let's go to them for a quick message. Now looking towards our markets, cattle futures began March under a lot of pressure after Russia's invasion of Ukraine. We saw them just nosediving, but towards the end of the month, markets did level out and actually gained a little bit of that money back. Now it's no secret what was pressuring the cattle, with grain exports pretty well shut off from the Black Sea area. We saw those prices launch upwards. Corn now nearly at 10-year highs, $7.50 pretty close. Prior to 2021, cost of gain hadn't been a great concern to feed yards, but now it could cost over $1.30 to add a pound of gain to an animal. On the demand side, the U.S. doesn't send a ton of beef over there to the EU, and particularly Russia and Ukraine, so the real threat to demand would be if the U.S. is forced into a recession due to high energy costs, more importantly fuel. If consumers have to start choosing, they might buy less ribeyes and shift down into sirloins or even grind. So that's a consideration there. We haven't seen much impact on the beef demand yet though, so beef demand does remain a positive aspect. Now, the invasion did disrupt the spring rally to cattle markets. Typically, feeders are hitting their high points for the year at this time, but they did move lower. Now, front month contracts felt the most pressure. If you look out to the deferreds, they performed very well. We've got live cattle for December at $1.50, and in the feeders, March ended with a $25 premium to the August contract, and we've got fall feeders in the mid-180s, so that looks pretty attractive right now. Those high corn prices and the strong basis for a while there actually pulled a lot of fed cattle forward out of feed yards, and that helped those feedlots to remain current. We did get a bit of a surprising cattle on feed report this month that saw the March on feed inventory the highest that had ever been reported in the series, up 1% from a year ago. Placements though 9% higher and well above pre-report estimates. Those placements of feeder cattle driven by drought and cattle being pushed forward as there's just not much winter grazing left to speak of. Now, going forward, placement should start trending lower, and there just won't be as many cattle coming to replace those being sold. It's just going to take longer to get to that point than we thought it would, but analysts are saying by the fourth quarter, tight supplies should start to show up, and that should greatly improve the leverage situation. For the cash markets, boxed beef finally turned upwards. Of course, we're nearing up on grilling season, so that usually provides a bump to demand. Cash cattle, of course, they were following the futures down hard to start the month of March, and they actually gained a little bit of money back. Right now, most of the live sales in that 138 to 140 money, and dress deals 221 to 223. For all the market disruptions, though, the most disappointing aspect for cattle producers right now is this drought situation. We're starting the spring in a pretty tough spot here. Still time for things to improve, but really the only areas that have seen drought relief over the last couple of months have been the eastern Dakotas and northwest Montana. Most everywhere staying dry, and the drought really stretching to the south and east, getting down into the southern plains, which could cause additional herd liquidation. Now, as we look at some of our auction markets from across the region, we're entering that slower time frame for marketing feeder cattle, and the high price of corn did take a little off the top for the feeders. Value staying pretty firm though. At Ogallala Livestock in Nebraska, lighter 5-weight steers selling 198 to 206, upper 5 weights 188 to 197. Faith Livestock, 7-weight steers sold 160 to 168, and 6-weight heifers 165 to 171. Now that we're into April, we're kind of out of the bred cow marketing time frame here. You can see where they ended up, and we're all starting to see some cow-calf pairs selling mostly in that $1,350 to $1,600 money, just dependent on the age. The cow market hasn't given up any ground at all here, and unfortunately we're seeing a lot of cows being sold, especially for this time of year. That's mainly due to the drought, strong demand for lean 90s trim, and packers making quite a bit of money off these slaughter cows is really encouraging the demand. Most of the cull cows right now selling from 75 to 85 cents, top end getting up over 90, bulls from 95 to 105, sub of the 1-teens, and heiferettes very strong from 120 to 130. April and early May will pretty much wrap up the production sale season. For a lot of our bull sales across the region, they felt the effect of drought and the fact that there's just going to be less cows to cover this year. A lot of the averages have been down. Some sales have sold less bulls. By and large, the demand for replacements continues strong. You can see some of the big sales across the region for the last month. Vermilion Ranch selling 5,800 open heifers, averaging $1,287. Sitz Angus, 249 yearling bulls, average $86.35, and Holden Herefords, 119 bulls with an average of $11,263. And in our sheep markets, that's been a very quiet time. Hardly any lambs sold whatsoever. For the ewes, the better end of the ewes bringing 140, maybe up to 160. Lower quality cull ewes kind of in that 120 to 130 money. Now, I know this spring has been a disappointment in a lot of ways for producers, but there's still reason to be optimistic. I know we're fighting high costs, whether it be feed, fuel, fertilizer for our farmers, but plenty of reason to be optimistic for this cattle business. I recently sat down with CattleFax CEO Randy Block, and he was optimistic on the direction here. Beef demand, he said, it's going to come down from last year, just the second best year in the last 30 years, he said. And of course, we'll have less beef production, so that does not hurt the price. Now, liquidation is likely to continue in the cow herd this year. We could be down another 500,000 head, and the drought may continue for another year, which should only help to put the cattle producers more in the driver's seat than they already were going to be once we get out of this drought situation. And we are going to see a substantial increase in packing capacity over the next couple of years. So there's a lot of things to like. We just have some difficulties to work through. One last thing I would mention, talking with Randy Block, he said, if you're considering price protection this year, he really encouraged producers to look at options so they can leave the top side open. He says there's a lot of potential for this market to move higher as the year wears on. If you're considering options, I'd encourage you to give LRP, Livestock Risk Protection, a hard look, and of course, talk to our friends at Ag Risk Advisors if you're considering that. That's going to do it for this month's report. Thanks so much for joining us. You can always find more ag news and market information at northernag.net. Take care.